Is the Eurozone going to save Bitcoin? We know that's a crazy question, but hear us out. The narrative that's dragged Bitcoin lower since November last year is that of the Fed raising rates and reducing its balance sheet. That's simple and easy to understand. But in the Eurozone, a fresh crisis is brewing. Well, it's not really that fresh. It's the same crisis that happened before. You know, the one that everyone warned about when the euro was being designed. But anyway, the spreads between German government bonds and those of the pigs, which is Portugal, Italy, Greece and Spain, have exploded in recent weeks. This comes against the backdrop of Eurozone inflation at a record high of 8.1%. And to cut a long and complex story short, the ECB may have to start buying sovereign bonds again. That may not sound ideal, especially in the midst of an inflationary crisis, but the alternative threatens the viability of the entire Eurozone system, which is a global risk event that everybody wants to avoid. And during the last Eurozone crisis, back in 2012, we saw a coordination of central banks around the world providing global financial markets with additional liquidity to ward off the debt crisis and to support the real economy. So how does Bitcoin fit into all of this? Well, simply put, if the situation in Europe worsens, which it's got a fairly decent chance of doing, the Fed might come under a lot of pressure to change or at least temporarily soften its policy trajectory. And seeing how Bitcoin has started trading like a highly speculative growth stock, it's poised to do well if liquidity is reinserted into financial markets again.